Good afternoon, good evening, Simbonani, Molweni, Dumelang.
Sawubona, President.
It's a Monday, ne? Hello?
Yep.
King, how's it?
Yeah, all good, all good, all good, all good. Are you guys good? It's been a while.
Sithembiso, hello.
Yeah.
Sithembiso.
Hey, unjani?
Hayi. Yeah.
Hey, bengithi angizoba khona kodwa sengitholile i-chance. Thanks for being khona.
Ngizokufonela after this.
Oh, all right. Hey. All right, guys. Welcome to another session. But tonight I want us to focus on candlesticks, the highs and the lows. Okay.
Okay, cool.
I think last time I sent out a ebook, just a short ebook about candlesticks. You guys go through them. Go through the ebook.
Yes, I did. Yeah, I did.
Okay.
You mean the file that you sent, right?
Yeah, it's
This one.
yeah, this one about candlesticks.
Yes. We went through it.
Okay. Okay, let me just do a bit of a summary, okay? So in trading, basically, because the way we do our analysis is we use candlesticks. So it's very critical that you understand candlesticks and also understand that the meaning that they bring towards the charts. Okay, because sometimes just a breakdown. Candlesticks are basically charts that provide information about the highs and the lows of certain prices. Okay, so with candlesticks, it predicts the behaviors of traders or investors. So a candlestick can represent a week, can represent a day, can represent like an hour, 2 hours. It's just a matter of time frame. So I think in many platforms they give you time frame to trade or to analyze 1 hour. So analyzing a chart for 1 hour, perhaps it can give you a nice entry point, but analyzing a chart for a week, where the one candle represent the week, it can give you a bit of a direction, especially if you're an investor or if you like to swing trade. So swing trading is about holding a trade for more than a day or a week, sometimes even months. Okay, so you must understand that when you look at the weekly time frame, it means every candle there represent the week. When you look at 1 hour, every candle there represent 1 hour. And to understand behavior, you have to do it in terms of exactly what are you looking for. If you're looking on the higher time frame, what exactly are you looking for? Okay. If you're looking at the
Yes, sir.
M5, you will have an idea what you're looking for. So a lot of times people they just switch between time frame and not knowing exactly what are you looking for in different time frames. So smaller time frame, most of the time you want the sniper entry point, clean entry point. Is where you're gonna push your stop losses, especially if you're intraday trading or day trading. And then higher time frame is where you wanna put in your take profits. Okay. Also, it's where you wanna look for a quick direction. Okay. So I think we all have a bit of an understanding of Doji candles. So are we good with Doji candles?
It's an
Yes, sir.
indecision.
Yes. So what does
So,
indecision mean, though? When you say indecision, what does it mean?
so what it means is that the opening is the same as the closing. There was no increase or decrease in price.
Yeah. Okay.
Yeah,
So
cool.
basically, it means when you're looking at the price, it was have you guys ever heard of something called equilibrium or a balance? Okay, so it means looking at the price, there was a balance between the buyers and also between the sellers. So the price
Yes,
reached
yes.
into a point called equilibrium. If you've done science, you'll know that there's a point where a certain solution reaching equilibrium point. If you are into business, you know there's a point where it's called equilibrium, where the price is not increasing or it's also not decreasing. So with the Doji candle, it's Doji because you don't see you don't see a domination of buyers. You also don't see a domination of sellers. Most of the time, when you see a Doji candles, a lot of times it's gonna be that there might be a potential reversal in the price. Maybe the price was going high, and then it just took a pause. Then you see a Doji candle. After that, you see a reversal. Okay, so a Doji candle obviously it's got a very small body. The body is a patch within the middle. The other parts are called wicks or called shadows, or sometimes they're in so shadows, wicks, or pins. Okay, so these part on our side. So these are the Doji candles. Obviously, like I think we have more understanding about it. That Doji is where you see a bit of equilibrium. Okay, and then a shooting star. Okay,
Before you go to the shooting star, so when we see a doji, so there's going to be a reversal. Is that like 100% probability?
it's not 100% probability. It's like there's a probability that it's gonna reverse, but it's also a probability that um the possible shift in the momentum of the candles that you're gonna see after the doji. And it
Yeah.
also depends, are you seeing the doji on the low or on the high of the day? If it's in the
Oh,
middle
in between.
of a range, it doesn't necessarily carry that much weight.
Yeah, it can even be a continuous painting.
Yes, because it's in the middle of a run of a movement. So it can also uh, it can be a continuation of a movement. Are you good with your question, or do you need more clarity?
No, I'm fine.
Okay, so when you see a doji, it's not a confirmation that's gonna be a reversal. It's a potential. Okay, so a doji, it's just that it carries more weight if it's at the low of the day or a high of the day. We'll do examples just for everyone to understand what we mean by the high or the low of the day. Okay. Okay, let's go to our next candle. Our next candle that want us to look at is a shooting star. Okay. The shooting
Yes.
star, the shooting star is a bearish reversal pattern. So when you say bearish, I think from our last session, we said bearish means the price is gonna drop. Okay. So what happens when you
Yes.
see a shooting star? The sellers were in control. Okay. And sellers were in control, pushed the price back down. And you can see that the price obviously at some point when you see this week, meaning the price was somewhere here. It was somewhere at the top, price was somewhere here. The price was somewhere here, and then it started dropping towards that level. So that is basically a shooting star. And at this point, obviously, you can see that somehow price reached this high level and it formed a pin or a wick or a shadow. The shadow, these are the black lines. I think you can see them there, okay? A shooting star, it's more likely the type of candle you want to see at the level that we call a supply level or the level that we call a resistance level. So a resistance is like your ceiling. So where the price more likely to reverse, okay? So I think we have discussed before that when we talk about supply, we're talking about the point where whatever instrument is available in excess, therefore the best thing to do is to sell that instrument. Okay, so for example, if you go to Cape Town, there's a huge supply of fish, huge supply of if around the area with a lot of vineyard. Obviously, there's a huge supply of wine and a huge supply of grapes. So chances are around those area, the price of grapes is very low. Also, the price of wine is very much affordable. And if you go to an area where there are no grapes, so in that area where there are no grapes, there's a huge demand and the price of grapes will be pretty high. Okay, so a shooting star, you want to see it where? In the high, you also want to see it in resistance level. Okay. So are we good? Is there any question regarding this one? So what is important sometimes regarding candlesticks is not necessarily the names. If you remember the pattern or the behavior of a candle, that is pretty much important because we don't want traders who are cramming or having to memorize name. But if you remember the pattern and you remember that when this pattern shows up in the low or in the high of the day or in supply or resistance level, then okay, it means probably the price is gonna do 1, 2, and 3. Okay. So are we
Yes,
good?
sir.
Are we good with the shooting star? Okay. I think the next candle.
Bye, please.
Hello.
Okay.
Okay. Let me.
O busy guy has to home rich.
Let's mute Tabisu there. Okay. Another candle that is also critical or important is the hammer. Okay. It's got the shape of a hammer. So hammer is a bullish. We said the shooting star is a bearish, but the hammer is a bullish reversal pattern. When you say bullish reversal, it means the price was dropping. And suddenly the hammer formed and we saw that there was a reversal of a price pushing back up. Okay, so that's why we said it's a bullish reversal. You want to see the hammer where in support level. You want to see the hammer where in demand zone. Okay, so obviously it means at the open the sellers were in control, meaning the price was dropping. That's why you saw a formation of a pin, these black pins or the wicks. Then suddenly buyers took over and the price started pushing up. So that's where you see the hammer. The hammer, obviously this pattern, you see them a lot of times. You know, after you see a hammer, more likely you're gonna see price start going up, you know, pushing further up. And like I keep saying, you wanna see this type of candles where in the low of the day, you wanna see them in demand. You also wanna, demand, low, and support. Those are the areas where you wanna see them. And then obviously there's some pattern that formed, even though this is not really clear, the bearish engulfing is not clear, but this here is your shooting star. And also this here is not really clear, but this here is your hammer. It's a bullish movement, and this is a bullish engulfing candles. Okay, this is important. Bullish engulfing, bearish engulfing is also important. Okay, but now let's quickly go to some examples so that you can see how are these candlestick patterns applied to the charts. And the nice thing about our classes is that we do examples. Okay, so we do examples. I think that's the end. Okay, I think that's the end. Okay, let's go through some examples. And the nice thing is, obviously, with the examples, we're also going to be doing some weekly analysis. You know, we like including those weekly analysis so we can all be in the same page. Okay. All right, so we can get started. So this is what? This is GBpusd. Okay. Okay, let's first clean it up. So the main focus of tonight's session is basically understanding of candlesticks in the low or in the highs, you know, and also, okay, so now, okay, let me just, okay,
Hey, Linda, that QML level. Yo.
let's unmute. All right. All right. So this is what? Okay. So this is a very nice pattern on Gbpusd. Okay. If you look at Gbpusd, you would have seen that after this base, the market actually moved to the upside. And this move here was triggered by that statement by Trump with regarding the tariffs. Okay, we saw the dollar dropping aggressively on that day. So, and you can see on this side here, on the left, it's a very nice QML pattern. Okay, and you can even see here, these are some of the resistance area. So you can call this R1, R2, and then the price move above with that level, and then the price dropped, okay? And this drop here, obviously, I think we saw this drop from the NFP, and then the price dropped, okay? But now, our main focus, so we take this as what? As a level of supply, okay? You can see the price dropped, it formed the base here. So which type of a candle is that? You can write in the chat box. Okay. Just giving you time to think and to write. Okay. Okay, so again, if you're looking at this chart, let's see. All right, Doji. All right, perfect. Okay. So if you're looking at this chart once again, if we mark this low on the daily, remember we're looking at the daily, okay, and mark that high, and let's just zoom in on that, okay. So we can see here from this level, before the market actually moved, it formed what? It formed a certain, you can see certain candlesticks here, okay. So the price moved aggressive to the upside, okay. Now we're gonna zoom in on a smaller time frame, okay. Smaller time frame is where you want to have your entry point, okay. So quickly, if you're looking at that, you can see what type of candlesticks are being formed on here. The type of candlesticks that are being formed here. You can see the first one, second one, it's like a shooting star, then the price dropped again, another shooting star, and the price started dropping, okay? And even here, this is a doji dropping, another shooting star, price dropped, came back, and another shooting star, the price continues with the drop, okay? But what is, if you go to M30, you wanna see also, this type of candles there at the top. See these type of candles, where are they forming? In our supply level. Go on a higher time frame. You should see it. And if you look at the H4, you can see there. See? So in 4 hours, there was this big candle going up, and then there was a doji and a drop. Okay. Then a drop. So even this candle here, this is another candle that formed. I don't want to say the name because I want you to memorize the name. A drop, and then further drop, and then another candle. You'll know the name of the candle, and then another drop, and then certain type of candles again, further drop. Okay. So this one carries more weight because it's at the supply level. Okay, so this doji carries more supply, more weight because it's at the supply level. But after this drop and then this drop, okay, the way you want to trade this drop is you want to place your trade there if you are selling here. If a price come back, you want to place your sell here. So what do I mean? I mean, this is where you want to place your sell. Okay, this is where you want to place your sell. Okay, so you will run about this doji. So this is where you want to place your sell if you're selling. Okay, yeah, 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 yeah. Okay. Why? This doji is at the supply. Okay, you wanna look for a hammer in the demand. Okay, so a demand area where the price actually move to the upside. Okay, so this is another one here. Critical phase. Okay, so you can see there hammer forming on. Is there a question? Yeah, I want to ask you. Let me save. Okay. Most of the time, it's always going to be a retest. So retest are the safest one to enter if you're entering any trade most of the time. Okay. Okay, so we zoom in. Let me quickly move this. So this one here, it's a nice entry. So check the type of candles that are formed there at the demand. Okay, this is the demand zone. Okay, so the first candle, obviously you can see the hammer being formed at the low. And then this one here is what we call bullish engulfing. So this candle, where you got, when you have this one here, okay. So I'm gonna mark that. So these two candles. So when you have this, see the black candle and the white candle. So that's what we call it bullish engulfing. Okay. Yes. So that is a very nice demand zone. Okay, so you mark that as your zone. So you'll expect the price to come back here and moved. Okay. So what you normally will do is you'll use this line as your price point, to place a pending order for a buy. And you can see the price actually moved from here. Another hammer, price moved up, came back touching similar level as that. See, the price actually came back here. So it touched here. So the price touched this level. The price from this candlesticks, it moved up. Then the hammer again, the price moved up, came back to the same low, which was that low, and started moving up. So if you miss this movement, if you miss this buy after this hammer, obviously you got another entry here. So the price moved up, came back for a retest. So a retest is a nice, and then moved up. Okay, you can see there on the left, bullish engulfing. You can also see on the left your hammer. Okay. All right, so once again, price move above these areas here. Okay, as you can see, these areas, this area, 1, 2, 1, 2, 3. If you look at these candles that are formed around this area, once again, okay, once again, we're gonna look at those candles. You can see once again the candles that are being formed in those areas. Okay. All right. Again, movement. All right. So what I'm expecting on GBPUSD, I think we have analyzed it before. We're expecting the price to drop towards this area, then come back here. and possible retest this level of supply. Okay, so that is my expectation on Gbpusd. Okay, let's look for another pair that is actually moving. Yo, what a drop on gold! What a drop! Okay, once again, let's look at the candles on the highs. Okay, the candles on the highs. These are the type of candles that are there on the highs. Okay, see those candles. Okay, so the price dropped towards this level, and let's mark this. This is previous level. So there is a previous level. So the price dropped from, you can see here the price formed a new high. You just mark this. So this new high, look at the candles, type of candle that are formed here on the high, and the price broke above this high. Why? Because there were a lot of, so it tested this level first time, second time, third time, a lot of times. Chances are a lot of traders, they have their stop losses around this area here. Okay, a lot of stop loss around here. So the best thing the market it can do, can break above that level and then come back with a drop. Okay, so a nice retest here. So a nice retest of this level. So this was a very nice level to retest. And also, if you note, this is also a bearish engulfing level. So a bearish engulfing level, what you are looking for, the price will drop, okay, and then retest that area. Okay, so a retest is a very safe entry. Okay, so let's retest this. Okay, potentially, I think this is my thinking. Okay, I think we spoke about this last time, that right now a lot of people are saying there is economic recession going on, but I think what is more likely to happen is that the Fed is gonna cut rates very soon. If Fed cut rates very soon, I'm not sure when it's very soon, but if Fed cut rates, what's gonna happen to the dollar? It's gonna have a huge drop. Okay, and if the dollar dropped, what happens to the gold? Because cutting rates means you're getting less interest on your dollars. So chances are you're gonna move your money to gold, and you're gonna move your money into indices, and that is gonna give companies cheap money to borrow. Hence, indices are gonna go in the sky rockets. Okay, so you can see this drop. It dropped towards this low. If you look at this, this is another high, and this high was broken here. The market broke this high here. So when the market moved up, it came back and retested this level. 1, 2, 3. And you can see here, there was a doji form here. Obviously, this was faking out traders to what? To sell. Okay. So this was a fake out of that sell. Okay. There was a doji here formed and the price dropped. You can also call this inverted hammer. You can also call this I think we call it a shooting star. The price dropped. And if you look left once again, another high was formed here. Okay. And you can see there was a bit of hammer. The price moved up. Shooting star, the price dropped. Coming back again, another bit of a doji, but this time around, the price actually moved up and it was at 30.49. And the price also reacted even in that level. See, 1, 2, the price reacted. When the price dropped below this level, it reacted on that low. So whenever you do analysis, always look left. Okay, this was critical level. The price touched, broke above, come back, but this time it just closed below. But what happened? It retested. Retested type of candles, doji candles, and it made a continuous drop. And where the price is at right now, if you go and look left, okay, just quickly zoom in. If you go and look left, the price is exactly in a previous in this level. The price is exactly at this level. See? The pins they touch, chances are the price is gonna drop. This is 29.53, okay? If we can zoom in there, you can see here. So this is some type of a resistance level. You can see 1, 2, first time failed, come back, drop, then touch, and then obviously forming some faking out there, fake resistance below that, faking out. And let's zoom in. If we zoom in, you can see the type of candle that formed here. Then the price started moving up. The price again formed some sort of support. S1, support level 1, support level 2. The price break above. When it comes back, it needs to close just below those two levels. Just below those two levels here. Just below those two levels there. What happens? The price drop. I'm expecting the price to come back once again in this level. Come back again here. Then move further up. It makes sense why it dropped below like this because of this 1, 2. Okay, let's zoom in so you can see it clearly. Zoom in one more time. Okay. Okay, so what am I saying? I'm saying that the candlestick that we have studied, if you see resistance level, chances are you're going to see a doji, you're going to see a shooting star. When the price drops towards this low and is in line with previous, okay. And if a price drops to a certain level, chances are, if it's in line with previous support or previous supply or demand, and you start seeing a hammer like this one here, it's going to react to that level. And you're going to start, obviously, buying. Obviously, the first take profit is going to be this level here, which was your previous supply. Okay, previous supply. So if you're buying here from 29.53, your first take profit is going to be somewhere here. Okay, then you can hold it even further, perhaps towards that level. And if the Fed decides to cut rates, obviously gold is going to be moving very aggressive, and also even Bitcoin and also indices. Okay, let's take some questions. You can unmute and ask a question in the next 5 minutes, then we close the session. Okay.
Where you were, is it 2953? That's where you will place the trade, right?
Yes. So basically, you look into this area here. So this is the area you're focusing on. You look at you basically looking for this hammer. Okay, so this is the hammer where it actually started. Okay, people. So this is a hammer. So this is my line. My line, basically, I think the point on the hammer is 29.51, right? Yeah, I think it's 29. Look at the red line. It goes towards 29.51. So that is where you put your buy. Okay. So let's do this. Yes. Then okay, continue with the question. Proceed with the question.
And then do you have other confluence to just confirm where we'll take profit? Because I see these lines are like, it's too many of them.
Oh, all right. Okay, wait. Let me just write that. So the first thing that I do, I look at the trend. Is the market moving in the uptrend or the downtrend? Okay, so that's the first thing that I check. Second thing that I check is the price on demand or supply zone. Okay, so that's another thing that I check. And then the candlesticks that are being formed around that area. Okay, so the most critical point is this here. This area is a demand zone. The price is slowly coming back to this area. Chances are it's going to move up. And this price has been dropping. So this was the first drop, second drop, and another third drop. So after that drop, I will expect a movement to the upside. Okay. What else can I say? Okay. And looking at this type of a pattern, obviously this is a first movement, first leg of my W, and this become another second level of W. So it's basically a double bottom. Okay. So there's a lot of things that over the years I have learned that I use before confirming an entry point. If you go and zoom in on H1, you can see the market actually. Okay, let me just remove everything so that you won't be confused by what is going on. All right. Okay. So now I think it's a bit clear. Okay. If you look at the price right now, it formed here a doji, and there was a bullish engulfing there. So let's just zoom in on that. So this was a bullish engulfing. Okay. So that could have been a point where traders are more likely to place a buy with expecting that the price will be bullish around this area. But what happened? It formed the doji again. So if you look at the smaller time frame, you can see that the price is slowly starting to move up. Okay, and that is in line with what we saw on H4. Okay, what did we see on H4? We saw a hammer here, and this hammer is in line with that level. Okay, which level is that? So this is a hammer marked. So the hammer is there, and if you look at that hammer, it's a small candle. Then after the hammer, big candle. What does it mean? It means this is where the bank traders actually place the trade. And this is the behavior you saw in the charts. When you see a big candle after a small candle, just know that the traders, the bank traders actually place trade here. How do you know that those trades were placed after that hammer? Is because you see a big movement after to the upside. And same story here. When you see a small candle going to the upside, just know this was a stop hunt, meaning a movement that was triggering to the traders so that they can place their sell orders. But the plan for bank traders or a market maker was to drop the price. That's why you saw a book movement to the upside. Traders started buying, then the market started dropping. So did I answer your question? Just to confirm.
Yes, thanks.
Okay, perfect. Okay, I think that will be it for tonight. I think we can stop here for tonight. I don't wanna do something called information overload because sometimes you can get confused. Okay, so at the demand area, you wanna look for a hammer. All right, because and also that's what I'm saying. If you look at this area. So this was some sort of a ceiling, the price dropped, and when it got here, the price break above. So if the price returns to the same area, chances are it's gonna move to the upside. Same story even here. So the price breaking and the price drop below. Because of this previous behavior, chances are the price, because it broke below, it makes a retest. Okay, so understanding supply and demand helps. Okay, because you are looking for trade in these lows. You're looking for the trades in these highs. Okay, so highs here. Okay, you're looking when the price dropped like this, it's going to take that level and then drop. So highs, these are your highs and these are your lows. Okay, I'll upload the session on YouTube and share the link. I think that's it for tonight. Good night.